Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola and Malaysian palm oil. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. The dark blue neckline extension, currently at 485.25 of the August to September 2024 reverse head and shoulders bottom, has been acting as a support since early March, as prices have tried higher up through the resistances at 491.75, then the July 21 low at 497.75, and even the resistance at 504.75. In the process, finally filling in the gap from June last year between 500.25 to 505.75, but not really managing to do anything other than stabilize over the dark blue neckline. And, as I said 4 weeks ago, and I quote, seems to be making a bit of a meal of it, as it is unclear if the action is forming a possible triple top or halfway hesitation. End of quote. So it was all as I said 8 weeks ago when I said, and I quote, now, should this dark blue neckline finally give way, there is no guarantee will even now, should it give way, then the pent-up bullish forces below may well push straight through the July 21 low above at 497.5, and surge on upwards to try and fill the gap seen back in June last year between 500.25 to 505.75, and maybe even up to what would be some pretty significant congestion dating from September 2012 between 513.75 to 519.5. It'll be interesting to see if this comes about. End of quote. So what else can we see? Well, I drew 4 weeks ago a late January to date bright green bull channel. It's currently 498.25 to 531.5, in the hopes that this might help in some developments higher. To be honest, it has been a limited success, though today looks quite interesting, or rather I should say yesterday looks quite interesting. Especially it was interesting, a limited success last week when the bright green lower bull channel had been breached many times, though not broken. Now I may need to revisit this pattern, but until then I would still watch to see if this market is making a multiple topping action around the 508 high, or else a bullish halfway hesitation with the possibility of significantly higher prices. Winnipeg Canola. There have been a number of patterns that have developed here, some with direct influence on the market. The recent rise started with the double bottom formed over December last year and January this year, and around the 50% absolute Fibonacci line at 606.90. This led to the first and what seemed the most consistent pattern here, which was a bright green December 25 to January 26 early, December 25 and January 26 through to early April 26 ascending expanding wedge pattern. And that's currently 759 even to 821.90. Now this pattern was breached 2 weeks ago and broken last week, but I'm loath to lay out targets or even potentials below for one single reason, and that's the bright red neckline extension currently at 722.30 of the October to November 23 reverse head shoulders pattern, which has seemingly absorbed the bearishness generated by the break lower and is acting as an attractor right now with the market spinning all round it. I warned about this bright red neckline 6 weeks ago, but it was more concerned about another feature when I said, and I quote, this is the next immediate obstacle overhead, however I do not think it is that much of an obstacle, especially given recent market moves. Thus I think we need to start looking at the 2025 high made back in June last year up at 751.70 and see how that develops. End of quote. Well, those words were very prescient, as that 2025 high eroded the high at the start of March and has capped every attempt higher since. The next is perhaps the most important longer term pattern here. I spoke about it 7 weeks ago when I said, and I quote, I've also drawn in the meantime a March to December 2025 bullish Andrews pitchfork. And I think the middle tie, which is currently 792.30, which is close to the earlier all-time high back in March 2008 at 770 even, which it was at the time. I think this middle time may become important. End of quote. No tines, even now, no tines have yet been tested on this pattern, which is in some ways disappointing, but no tines have yet been tested on this pattern, bar the lower time back at the start, and that held. But I still think this may become important in the future, so please keep it in mind. Finally, the same question haunts this market as it does rapeseed and soybean oil. With capped highs and a somewhat static base, will the action since March become a topping action or a possible bullish halfway hesitation? Now that is the question, and I am still trying to get my head around it. Versus Malaysia crude palm oil. To start with, as I've done here for most of last year and now into 2026, I'd recognise the one congestion area that was overhead but now may be becoming a support of sorts, between 44.08 to 45.59. We tried in mid-October last year to pierce it and failed, with prices punching back down through the lower edge of this congestion as we exited October. We have again tried to press down through it this week, but have seemingly gotten somewhat stuck. Please continue to remember this congestion area despite this week's actions. Now going back now to the rise in early March, the reason for the strong rise is another congestion zone developed, this time further below, between November 25 to February 2026. In fact, it was 3 bands of congestion below, made up from the lesser Fibonacci line at 40.26, then congestion at 39.86, and the February 2011 high at 39.53. These 3 eroded the bearishness we saw at the tail end of last year, and after a failed attempt higher in late January, which ended up with a V-top, we have had a quite decent small February based double bottom, Adam and Adam type, with these primary and secondary targets reached by 7 Fridays ago. The apex of that move was with a gapping move higher that peaked 6 weeks ago, just over, and then 5 weeks ago, just under, and with yet another move higher, a sustained move higher during the first 2 weeks of April. This move high ultimately failed at the bright red neckline extension, currently at 49.20 of the big old September 2015 to November 23 reverse head and shoulders pattern. So that's a really big pattern. And that is just short of 2 important 50% Fibonacci lines. And they're a little overhead. These are the 50% Fibonacci line of the July 19 to March 22 move at 49.64. And the May 20 to March 22 move at 49.92. Now the subsequent drop was halted this week by the bright green short medium moving average, currently 43.66. Not a major support on its own, but if you consider it sitting in the shadow of the congestion between 44.08 to 45.59, then I think it's worthy as a support. However, the question here is the same as elsewhere in the veg oils and oilseeds. With the capped higher market and significant supports below, is this market forming a topping action, or is it some form of bullish halfway hesitation? We shall have to see. Now there is one further pattern I would like to consider, and it is this. In the whole of the April 25 to date action, it is a really, really large double bottom, or even a very, very large big W pattern. On this, I'm not sure as yet, but I would rather ask the question and look silly now than look even sillier later on when it may happen. Continue watching this space for that big double bottom or big W pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.